UPL will also be given to the Advanta shareholders. Shroff CEO of UPL joins us on the phone line on this. Mr. Shroff, thank you very much. How did you decide on this? The market was largely expecting a 1:1 share swap. Why that extra sweetener of 30 rupees?
Well, we hired various consultants like KPMG and Citibank and Kotak, and they all worked out that this was the most fairest value for both the companies and both the groups of shareholders.
Okay.
So, and the board felt it was also very reasonable. Advanta has been growing and is projected to grow quite well in the next few years, and so is UPL. Considering the expected growth in the next few years, this was what was agreed.
Okay. Mr. Shroff, thanks very much for joining in this morning. Can you just give us a sense in terms of what the combined balance sheet as well as sales might look like?
So basically, if you look at the year one, obviously it will be 1+1. UPL and Advanta have been outgrowing the industry by almost double of the industry rate. So if you look at the ag chem industry, UPL has grown at about 16% over the last 10 years, and so has Advanta outperformed the market. We believe that UPL has a great presence, direct presence, and we have been building up a platform across the world to get direct access to farmers, to develop our brands, and we believe that we have reached a point where we have a huge amount of access to the farmers. With Advanta consolidating with UPL, we believe that we should be able to give those relationships which we have, particularly in Brazil, in US, Europe, Mexico. Even there'll be value creation in other markets like Australia, Thailand, where Advanta is very strong. So the customer access UPL has is much stronger than Advanta, and Advanta will benefit from that. UPL will also benefit because having complete value chain, which is right from the seed to plant protection technology and post-harvest. UPL is a world leader in post-harvest technologies to reduce food losses.
Okay.
Now we have an end-to-end solution, and if you look at the world of agriculture, all the players are looking at a complete value chain. This will bring tremendous value to our trade partners and to our customers.
Okay. While y'all did flat revenues last year, and y'all did a 10% rise in revenues in FY15, would you be on track to do 10% this year as well? And Advanta, the historical earnings have been flat. So hence the question, what will the combined entity do in terms of revenue growth?
So we expect UPL to continue. UPL and Advanta also has been growing at about 10-15%. Depending on the year, and we expect that UPL and Advanta will continue to grow. We believe for the year 18 months from now, we will get synergies, and Advanta will benefit from some of the access UPL
No, I get your point. I was just trying to get some number in terms of, would it be a 15%?
We expect 10% growth is what we have forecasted to our analysts, and I think we'll stick to that.
And what would your export earnings be? Would that do better?
Yeah, I mean, on the seed business, it's a very local business, so we produce mostly in all the local countries. As far as the industrial production and exports from India of our AgChem will continue to grow at much faster rates than we have a much higher growth rate in our exports from India.
Okay. In terms of the synergies, what are you envisaging, and would there be any sort of consolidation of your workforce, considering that you all would be selling common products now?
Yeah, so of course it increases our presence across the value chain, and this will be the biggest synergy, is that when we are calling on our customers, we are selling them a complete solution. So a seed customer will get an option to buy our AgChem customers, our farmers and large food companies will buy our post-harvest technology. So we see synergies there. We believe that Advanta, which is direct presence only in 6 countries, will get benefit of UPL's direct presence in 40-plus countries.
So margins go up, you think?
We believe that margins should help us, particularly with established products. We should be able to increase our margins.
What is the debt and the free cash of both these companies, and how will the consolidated entity fare in terms of debt and cash?
So as far as debt is concerned, the consolidated balance sheet will have about 4,000 crores of debt. And as far as cash flow is concerned, we should have 1,500 to 1,800 crores of cash flow, free cash.
Which are the geographies that you will be concentrating on?
So as far as, so both the companies have some geographies where they are very strong in. So if you look at Advanta, they're very strong presence in Australia. In the wheat market, we have a 20% market share. In canola, we have a 40% market share, which are the major field crops. UPL presence in those crops is not as strong as Advanta, and Advanta will benefit. So is in Southeast Asia and some of the markets, Advanta has dominant market share, particularly in Thailand and some other parts of Indonesia, etc. And UPL has a smaller presence, and we think we'll get there. In Brazil, where UPL is growing quite aggressively, I think Advanta will benefit because we have extremely strong partnership with the large farming companies. Okay. So these are some of the major markets. Even in the U.S., we'll see some immediate benefits. These are the short-term immediate benefits where we'll see some benefits in 18 to 24 months.
Okay. Any further inorganic moves now that you are a much stronger entity, bigger balance sheet? UPL, provided the valuations are good, we always look at acquisitions. In the last 3 or 4 years, we've told the market that we will not be doing many acquisitions, and we've stuck to it in the last 3 years. We believe that there is a lot of consolidation in the industry, so we may look at it, but that's not part of our key strategy. Our key strategy is to grow organically and try and generate as much free cash as we can for UPL, because today we've achieved a global presence. We are almost present in all major markets in a very significant way, so we really do not need to make any acquisitions to increase any any presence, which we have done. Our last acquisition was 2011 in Brazil, where we did not have presence. We've really achieved that, and so all major markets, UPL is a very strong player, and we believe that we'll be able to continue to gain market share, which we are doing.
Would you be looking to tweak down your debt levels from this 4,000 crore mark?
So I think proportionate to the cash generated, we will continuously reduce the debt. We've done it. We've done some share buybacks in the past, and we will focus on increasing shareholder returns.
What's the promoter shareholding now in the combined entity?
The combined entity, it will be a little bit less than 30%.
Okay, as it is in UPL now. Okay.
Yeah, it'll be a little bit lower as a combined entity, but yeah, more or less the same.
No share capital issue or anything that you will do to your capital now?
No, there's no need. We are generating a lot of cash. We don't need any cash.
Then you could always give a bonus announcement. But, I mean, you're not planning to touch your capital anytime soon?
No.
Okay. We'll leave it at that, Mr. Shroff. Thank you very much for joining us with all those details on the Advanta merging into UPL. So that's a 1:1 and plus a 30 rupees that the Advanta shareholder gets per share. And now it appears at the moment the UPL share is weighed down a bit. I guess that 30 rupees was unexpected. The Advanta share will also come up for you. But in course of time, since it's a 1:1 issue, one should expect the shares to move closer to one another. So perhaps the Advanta share will get closer